Oh, never mind. He's good then.
Good afternoon, greater Philadelphia area. This is Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Stacey Mitchell. And again, we work with the Tom Toole Sales Group at RE/MAX Mainline, the number one RE/MAX team since 2018 in Pennsylvania and Delaware. And we've got a lot to cover today. We got a lot of things we're going to discuss about what's happening in the market. Are we on the beginning of a shift? Are things changing? And the usual Zillow News weekly update, because they are the Google of real estate. So how's everything going today, Stacey? How you feeling?
Good. A little crazy. It's been a crazy couple of weeks. But, you know, it's like everybody in real estate these days.
Well, the people that are working, yes. And I think, we talked a lot about that the last couple of weeks, about what happens in August, and especially this time of year, where it's definitely been that more seasonal market that we're used to, rather than post-pandemic 2020, where we had our break in the middle of the spring market thanks to the government in Pennsylvania. So what we want to talk about today, it's actually interesting you bring that up, because the first story we're going to talk about, and we're going to go over some case studies here as well along with this, is something that came out in Realtor magazine, where they talked about the article dropped, I think, on the 16th, so about a week ago, and they said that sellers need to start rethinking their asking prices as listings are starting to linger on the market. The article goes on to say, according to Realtor.com's July housing data, that there's 45 of the city's 300 largest countries had an increasing number of home price cuts, and Philadelphia was number 5 on the list, with 22% of all the home listings or all the active inventory in the greater Philadelphia area saw a price cut, or I look at it as a price adjustment, in the month of July. So what do you think about all this? What does this mean for the market, Stacey?
Well, it's interesting because I have noticed that. I think that some of the sellers went out pretty aggressively with their pricing. It may have been not to the advice of their listing agent, but it just might have been, them trying to capitalize on this amazing seller's market. That being said, the market really is the one that dictates, the home price values.
Always, yeah.
So, if a house is sitting there, if the feedback coming in after showings indicates that, the home is overpriced, there has to be adjustments. So I have taken advantage of this. I've looked for homes that have been listed on the market, 12, 16 days. And first question is, what's wrong with the house? First reply is, it could be overpriced. Let's go take a look. And typically that's what it is. So there's opportunity there. That's what I think. It's buyer's opportunity. Look for the homes that have been sitting on the market for a little longer.
Well, we've been saying this week after week, and even since, the spring market and the beginning of the year, when things were pretty incredible, pretty amazing how fast homes were selling, what they were getting. You bring up an interesting point, is that the market sets the price. I mean, that's what the houses always work. I don't care what an appraiser says. It's what someone is willing to pay for a property. And what they talk about here in the article, Danielle Hale, who's Realtor.com's chief economist, said that price cuts could be a signal, or could signal, a turning point in the market, and they may also just be a sign of sellers getting ahead of buyers in pricing. And for all you sellers listening out there and all the buyers, typically what happens, and I've been through a number of these shifts, is that the sellers are the last ones to realize the market's going the other way.
Yes.
And they're the first ones to want to adjust their price pretty aggressively. And she goes on to say there seems to be some markets where it's a local custom to price real estate that way. And when you look at these other cities, I don't see a common trend here. The first one's Des Moines, Iowa. Second one's Midland, Texas. Third one's Toledo, Ohio. And the fourth one is in Louisiana. I can't even pronounce it. Metairie? I don't even know. And then it's Portland, Oregon, and Anchorage. So clearly Philadelphia is easily the biggest metro market here.
Yes.
And when you look at those things, I think that but they're all, and you look at the median price points on these, they range anywhere from $117,000 up to $550,000. So we're kind of right in the middle of that, where our price in the city of Philadelphia, they're saying it's 289 in July. We know the average sale price around has been like that 360, 370 range. So, what I know is that there's a couple things happening, and we're going to give you some examples here of what's actually going on in the market right now. And what's really happening is that, in particular, we've seen inventory trend up a little bit. It's up to like a 1.2 month supply in the suburbs, and a 2.2 month supply in the city, which is higher than it was about a month or two ago. We also saw that new listings have continued to outpace pending sales in Philadelphia, Montgomery County, Delaware County, and Chester County. This has been the third month in a row. This started happening in May. So it's been May, June, July, which is another sign the market might be on the very early signs of that shift. Here's what I wanted to share. And I'm not going to tell you the name of this agent, but he's or she. And what this person told me is they put 3 homes on the market this past weekend. And literally within 2 or 3 days, the phone calls came in one after another from the seller saying, "Hey, where's the offers? Why aren't we getting more offers?" So there's also something with the seller mindset here. And it may be that, hey, well, the market's been hot. It's going to continue to be hot. I mean, I'm pretty clearly seeing that, yeah, the market's hot when a home's priced right. When it's not, I mean, these homes are still sitting on the market. Are you seeing the same thing, or what are you seeing out there in the field?
Yes. When the homes are priced accordingly, they go quickly. In a weekend, they'll be calling for all offers in Sunday night, 8:00, seller making a decision Monday morning, at 11. So it is about price. If a home is overpriced, buyers are, they're pretty savvy. They'll look.
Agree with that.
And, they take their time, and especially if it's, the first weekend's passed. And I can look on the showing schedule and see how how booked the showing schedule is to actually see the activity.
A lot of people don't realize you can do that as an agent.
Yeah.
And that's and so can you walk through how that works, just especially for the consumers that are listening here? Because in the past, you never found out anything. You have to guess by the amount of cards sitting on the table at the house. That's not the case anymore.
Right. So when you do, if a buyer wants to see a home, then we utilize this platform called Showing Time to schedule the showings. So it's great, because say a house comes on Friday, I can try to schedule the showing for Saturday or Sunday. You can actually see time blocks of already confirmed showings or requested showings. So say typically, anytime last fall, early spring, there might have been a 15-minute slot somewhere on a Saturday or Sunday that you could squeak in. But now you're seeing whole afternoons open, or, mornings open. There's many times available for showings. So now consider this, summertime. Many people decided to take vacations that they couldn't have done the past year.
100%.
So some buyers are not actively engaging in the market at this point. So that could be part of the reason. So yeah, it's definitely been a little bit different in the past couple of months. I think of it as an opportunity. I like to take advantage of it, get the buyers out there if they're serious, and let's get under contract.
Well, that's a really important way to look at it. And what Stacey's doing here, and this is how we teach all our agents, and this is a really great opportunity to talk about our real estate scholarship program, because we have trained her to look for these things, to bring that kind of knowledge to the table. And if you want to have these kind of techniques available to you and learn these things in your business, and you're thinking about getting into real estate, check out realestatescholarshipprogram.com. But what Stacey's doing there is just making observations and bringing knowledge to the table for her clients, because in a lot of cases, the agents just show up and open a door. That's the challenge here. So you're looking at the technology, you're seeing what's available, that there's these weekends open. Also very clear. I agree with you on the vacation thing. School is starting, I think, next week for some places.
Yep.
Our kids go back the following week. Once that happens, I mean, this is something I've seen every year but last year, that there was this little bit of a slowdown during that back to school, last minute vacation, Labor Day weekend sort of thing. So that's real. And people couldn't go on vacation last year.
Right.
I mean, they could, but some people chose not to. And that's like a whole nother radio show for another time. So I do agree with you there that there's this August mindset, which we talked about a couple weeks ago. There's more to it, though. It's not just vacations. So I pulled some data here from the T3 Home Demand Index that partners with Bright. Bright's our local MLS. So if you look at the Home Demand Index, and this is a statistics that's calculated by T3, which is a large national company that charts trends in the marketplace. The Philadelphia metro area, the demand index fell nearly 18% in July. And that was the third consecutive decline since the peak in April. And, when you look at that, and then they have on the right-hand side here, they qualify their numbers here. So the index is listed as 115, which you probably don't even know what the heck that means. What T3 does is they classify this as anything above 130. That's a high demand. Moderate is 110 to 129. Steady is 90 to 109. Slow is 70 to 89. And then limited is below 70. So we've seen a big drop in the Philadelphia metro area. And when you look at, you just look at that number, that's probably has something to do with it. Then if you want to go a little further, what we also did is we charted the showing time weighted showing average through 8/22, so through just a couple days ago. So nationally in 2019, through the same time of year, what they do is they take the showing activity on January 1st of each year, and then they show the delta or increase or decrease based on activity from that date. So on August 22nd, 2019, showing activity was up 19.9% from January 1st of 2019. The same date in 2020, it was up 30.1%. No surprise there, especially coming out of the pandemic. This year, it's at 10.8%. So I look at the 2019 levels more than anything else. You got to throw out last year.
Yeah.
In Pennsylvania, the numbers are trending similarly. So a 13.5% increase from Jan 1, 2019 to August 22nd, 2019. Last year, same time frame, 34.3% increase, again, because the spring market was shut down. Now we're at 12.5. So it's actually Pennsylvania, the demand's held a little stronger, but nationally you're seeing the demand drop a little bit. So I mean, there is something to getting the price of your home right, because we're not seeing that fever pitch demand anymore. We're starting to see that when active listings outpace pending sales, even though inventory is very low, and I don't want to minimize that.
Right.
You're starting to see that there's a normalization of the market, meaning maybe prices are only going to go up like 6% over the next 12 months, not 10% or 12%. So what all this comes back to is there's three pricing strategies for the market. So what should sellers be doing right now? I'll get into the pricing strategies, or maybe let me outline them, and then you can give your advice here, Stacey. So there's the price it above market and see what comes in. Price it at the market very fairly, or price it below market and try to get people to bid the price up. So you're meeting with the seller. You're at their living room or dining room table or their kitchen table. What strategy are you recommending and why?
Definitely, I have to see where their heads are first. I want to see what are you thinking? Where would you like to price this? Where do you think your home should be priced? Get their feedback, see what they say, and see, how much I have to bring them to reality or educate them about what's going on in the market today. But personally, for me, I think I think it works out better for the seller if you price it at market. I know if the seller is totally against it and they want to go high and real aggressive, okay, fine. Let's try that and see what happens. We'll give it a week, get the feedback, and then just see what the market says. Hey, maybe you'll get that unicorn buyer, right? That says, I want this house. I'm going to throw in this offer. But maybe not. And maybe based on the feedback, you'll do a price adjustment. But coming in at market, or I've seen the strategy where pricing a little bit below market to, generate that interest, the competition, and you do get multiple offers, and it can drive the price up, which makes the seller very happy.
Well, there's pluses and minuses to both. I mean, what I know is this, that when you price your home at a number that's going to be out of the market, and there's always a stretch number. To me, if you're a seller, you've got to look at the segments of the market, and this is the mistake a lot of people make. So let's say the home's worth $500,000. You think it's worth like right around $500,000. You price it either right at 5, or you almost want to go to like 5.25, because you're in no man's land otherwise. And what people don't get a lot of times is the search engines and how they work. That, when buyers get pre-approved, they say, I'm good up to 500. They don't say I'm good up to 513.
Right.
They say I'm good up to 500, or I want to spend up to 450. There's these natural segments in the market, and that's the difference between positioning versus valuation. So I would be very mindful of positioning, and then looking at comparable sales in the area. And you can usually see the trends. If you have a good agent, they'll tell you that, okay, well, in this neighborhood, because all the homes are the same, a finished basement gets you to this baseline price. You don't have that, so you're going to be a little lower. So the pricing it way out of the market, that never works. The homes that are on the market for weeks and months at a time, people wonder if something's wrong with it. And the reality is that it's usually not priced appropriately. So that's number one. Pricing it at market does a couple things for you. It gets the serious buyers in there. It positions you to where you're getting a lot of activity. You should be getting feedback. And ideally, you get 1, maybe 2 really good offers. The challenge with pricing it under market, hoping, intending that, hey, I'm not going to sell it for this price. And this is where you said something really important. You got to see where the seller's head is at. I'm not clear you ever want to bring a number to the market that you're not willing to accept. And I've seen some people do that. And then what if the bidding war doesn't happen? Right? Like, what if, all of a sudden the market changes? Because you don't know what's going to happen when you put a home on the market. I mean, there's been many times where I've listed homes and I thought there's no way they're going to get this price. We'll test it out. And then we got people bidding. There's others where you think the home's going to sell in 10 minutes and it takes a bit longer. So there's no telling. And especially in our kind of market, because the homes are so different. You can go down a street and have a home that's built 5 years ago, one built in the 1940s, and then a ranch home, and the other 2 are 2-story colonials. And then you got some 100-year-old guardhouse there. I mean, that's the way the market is. So that's where it gets a little challenging. So if you're a seller and you want I hope it goes higher strategy, the best advice I have is don't bring a number to the market that you're not willing to accept. Because if the bidding war doesn't happen, then you're not going to be happy with the number, and raising the price is not an effective strategy when you're not getting activity. So
that
that's
doesn't
the thing.
work either.
I think that's the thing a lot of people need to be aware of in this kind of market. And what I'll say here, and we talked about this with David Childers a couple weeks ago, we've been talking about this a lot, is it looks like we're on the front end of a shift, meaning prices aren't going to start going down. They're not going up 10, 11, 12% year over year. And that's what a lot of people need to be aware of. And this is good news for buyers, and we'll get into how buyers are not competing as much in the next segment. But this spells opportunity that you hit on, which we're going to cover next. So on that note, what we're going to do is we're going to take a quick break here. We explained all the reasons why sellers need to rethink their asking prices. When we come back, we're going to talk about why less buyers are competing. You got a question for us? You got something you want us to cover? It's info@tooletimeradio.com. And we are streaming live on Facebook and YouTube. Just search Tom Toole Sales Group. We'll be right back on Toole Time Real Estate Radio on WWDB 860 AM.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com.
Mortgage America's equal housing number MLS 128501.
Buying a home or already own one? We can help. I am Kevin Hamill from Alliance's Insurance Agency. If you haven't reviewed your policies in the last 3 years, now's the time. New home buyers, there are a number of ways that we can help you get to that settlement table. Call us to find out more at 610-816-0043, extension 3, or visit our website, alliancesinsurance.com. Don't forget the S, it's for savings.
The real estate market is red hot. Have you considered taking advantage? Call the Tom Toole Sales Group at RE/MAX at 610-692-6976.
Stand by.
TomToole.com to connect and take advantage of these market conditions.
Go for it. You can start talking if you want.
Welcome back to Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Stacey Mitchell. And again, we both work with the Tom Toole Sales Group at RE/MAX Mainline, the number one RE/MAX team since 2018 in Pennsylvania and in Delaware. So if you got a question for the show, email us again. It's info@tooletimeradio.com. The live stream is on Facebook and on YouTube right now. Just search the Tom Toole Sales Group. And we're going to pick up right where we left off, Stacey, because we talked about what sellers are seeing now and having to be more mindful of their asking prices. Mm-hmm. So that's one component of the market. The other side of this is buyers. Mm-hmm. And there was some news that came out yesterday, not news, but data, news too. And this is on Housing Wire, that there was a report published by the National Association of Realtors on Monday that said existing home sales grew by 2% in July from the month prior, but there and this is I hate these headlines. I got it. It says fewer first-time home buyers are competing, but then they talk about this, and then the author says, but first-time home buyers are still getting squeezed. But the reality is that the data they go on to quote here, it's like, make up your mind with this thing. The inventory of unsold homes rose by 7.3% from June to July in the entire country to 1.32 million homes. So the development here is after a year of very tight housing inventory. And the inventory got much tighter this time last year than maybe even in May, June, July, at least in Pennsylvania, because of the pent-up demand. The housing market is starting to show signs of adding housing stock, and inventory rose by 7.3% of homes that didn't sell. And now inventory still down. We're not going to tell you it's up or it's at a great level. I mean, we were at about a 4-month supply before the pandemic. Now we're at a 1.2-month supply. So you can do the math there. Nationally, inventory is down 12% overall from this time in 2020. And so, I mean, what we're seeing is that the market's starting to go the other way. So what I want to, I'll give you this other quote from Lawrence Yun, the chief economist at NAR. Then I want to hear what you think, Stacey. So Lawrence Yun said in a statement that as inventory is starting to tick up, the intensity of multiple offers is lessening, leading to a more balanced housing market for home buyers. Are you seeing this right now? Is this accurate? Tell us more about that, Stacey.
Well, it really depends on the home itself. I have to say that. But that being said, I'm finding that there's homes that don't have offers yet. So you might, if your buyer's interested, you might not be engaged in a multiple offer situation. Although this weekend I lost out on a multiple offer situation, so it's still happening. It really depends also on the price point of the homes. I totally believe that certain price point segments are still much more busy than others. So that's a consideration there. What also Yoon had added was that much of the home sales growth is still occurring in the upper end markets.
Yeah. We're seeing more transactions there for sure.
Yeah. And so there's still fewer starter homes available. And that's what I am finding. But again, there's opportunity. Look for the homes that, for whatever reason, they don't have offers, or, they've been on for about 14 days, 12, 14 days.
This is where it's so important to have an agent that is well-informed, because a seller's mistake in this market can be what gets a buyer a property at a fair price. I mean, how many times have you seen a seller overprice their, and we just talked about this, like overprice their property, overshoot the market, and then all of a sudden a buyer's willing to make an offer that's a fair offer, and they get the house and there's no competition.
Right.
Knowing full well, meaning the realtor or you would know full well that if they would have priced it where the buyer got it for, they probably would have had some competition.
They totally would have had the competition for sure.
This happens all the time. So, that days on market statistic, we keep talking about this because it's that critical. So if you're a buyer out there right now, I'd be monitoring that very closely. And if you got a home you've been watching, and it's been like a couple weeks and you haven't seen it pop up sold yet, that's the home where you might be able to write an offer that's going to get accepted. That's not full price, non-contingent, cash, blah, blah, blah. We've talked about that before, where it's an offer that you can maybe negotiate a little bit, which hasn't been that in vogue over the past 18 months. So in this report as well, Matthew Speakman, an economist at Zillow, He's saying that demand is firm and it's boosted in part by the gains in inventory that are giving buyers a better choice. So do you feel like buyers are having more choices now than I mean, do they have two homes to pick from instead of one? Or this has been
I
a
think
talking point
so.
for a long time. So you think so? So tell us more about that.
I do. Just from personal experience, the past couple of weeks, um, instead of just scheduling 1 or 2 showings for buyers because that was only the
Mhm.
inventory, I'm getting 5, 6, 7 homes that could potentially that hit their criteria, and we can get out and see them before it goes under contract. So I definitely am seeing a little bit change there. Again, it really depends on the property itself, but for the most part, yeah, there's options and opportunity.
So we're seeing options, we're seeing
Mhm.
opportunity, and if you're a buyer and you're thinking about waiting right now, here's some important advice from Lawrence Yun, where he says that I mean, you just look at the median home price in July was 359,900 in the country. That's up from $305,000 last year. That's a 17.8% increase. We're not seeing those gains here, to be very clear. We've
Mhm.
seen more of like an 8 to 10% appreciation, depending on if you're in Montgomery, Chester, Delaware counties, or Philadelphia, and then the actual like neighborhoods, townships, municipalities there. So, but what he's saying is that home prices are very unlikely to drop in coming months,
Mhm.
and there, if anything, it's been more normal appreciation. So you look at, kind of year over year, what people are predicting, and I'm going to go to what a report that's on Keeping Current Matters that will it shows home price projected appreciation over the next couple of years. We'll pull that up while we're talking here, but I just
Mhm.
don't. I don't see prices even leveling off. I mean, you're still going to see
Right.
them go up, and the big thing you got to think about is what's going to happen with mortgage rates. Because if
Right.
rates go up and prices go up a little bit, what
Yeah.
does that do for you?
That means that buyers are going to pay more for the home or have to take less home for more money. So what I tell buyers is you definitely don't want to wait, because I hear buyers say, "Well, I'm going to wait until the prices drop." And again, to your point, the prices aren't going to drop. The market's going to level off, but you're not going to see, a dramatic like prices across the board just
Hmm.
tumbling down. That's definitely not going to happen. They're still going to increase, still going to rise. But again, if you have interest rates that decide to tick up a little bit,
Hmm.
that that could be the difference if somebody qualifies for a mortgage or not. So where a home buyer could get into a home now and they want to wait because they want to wait till the market levels out into early next year, they could totally be out of the market if the interest rates elevate.
Well, and that's where affordability is an issue. And if you look
Mhm.
at what Keeping Current Matters came out with some information, and that they're a news service for real estate. That if you look at price growth from what the expected rate of appreciation through 2025, and this is a national number, they're expecting between 8 and 9% this year, 5.12% in 2022, 3.7 in 2023, 3.5 in 2024, and 3.33 in 2025. That's more the normal appreciation that you typically see.
Mhm.
So for even waiting 6 months can cost you a lot of money here, and that's what a lot of
Right.
folks don't get. So because we're seeing something start to come on the market, and what I'll tell anyone that maybe got shut out this year or had trouble finding a home,
Mhm.
there's a lot of opportunity this time of year, because how many people are you speaking to now that are already talking about the spring of 2022? They just bypassed the entire next 6 months.
Yeah. Again, I try to tell them not to do that.
Well, I know you
Yeah.
don't, I know you don't, but how many
Right.
people are
Yeah.
that's their disposition? That's
That
what they're
is
hearing.
that. Yeah. Exactly. That's what they're hearing. They're just going to wait it out into spring of 2022 and just see what happens. With fingers crossed, I guess.
Well, and here's the thing that folks don't get. So if you're like a first time buyer,
Mhm.
and what Lawrence Yun talks about too is that the elevated cost of housing is also causing rental prices to go up. So
Yes.
now it's costing you more to go pay someone else's mortgage,
Yep.
pay their taxes, pay their insurance.
Mhm.
And so, I mean, you have to be mindful of what the costs are going to be and actually have a financial plan, which a lot of people don't get.
Mhm.
Then the next step there, if you want to wait, is what kind of appreciation or equity gain could I be losing
Right.
over that time? Because that goes to your net worth, that goes to wealth building, and a lot of folks don't get the math. They just say, "Oh, well, I'm gonna wait for the market to get better," and they don't really have any real data around it. And that's always the thing that concerns me, is that it's not a database decision; it's a gut feel or an emotional decision. And this is very emotional, buying a home.
Yes.
It
Very.
ultimately it is a business decision for people, and it's a major financial transaction. So to give some perspective here, the first-time home buyers, they accounted for 30 sales in July, which was down from it's down 1% from June. It was 31% in June and 34% year over year. So
Right.
to your point, there are less entry-level homes coming onto the market,
Right.
and because there's also the competition of cash buyers and investors and all these iBuyers coming in.
Right.
So, what's the outlook here for buyers? Like, what should buyers be thinking right now, knowing that they're competing less?
Mm-hmm.
We're seeing inventory rise a little bit. What should they be doing if they plan to make a move in the next 6, 12, 18 months?
So for buyers that are considering, definitely get your financial house in shape, meaning speak to a lender, speak to a couple lenders, see where you fall as far as how much money you're going to need to put down on a home. What is the price point of the home that you should be looking for? Your closing costs, understand that. Start interviewing agents. You have to be comfortable with the person that you're going to be working with, because this is a big financial undertaking, and you want to be able to trust that person, and you want somebody to have a lot of knowledge and experience. So definitely interview agents, definitely interview lenders, get your financial house in order, and start looking at the market. Start, looking at houses, driving by neighborhoods, get a sense of where you want to be, exactly what type of home you're looking for. And then when you're ready, you have to get out and get into homes and actually, look inside. But you should have all those things lined up and in place and ready to go before you even step foot into your first home. Because one thing you don't want to do is miss out on an opportunity. If you start looking at homes before you have anything in place, you might find the home that you absolutely love and you want to put an offer in. But guess what? You're not going to have anything. You don't even know if you can afford the house. You don't even know. You haven't talked to a lender. You don't have your pre-approval. So make sure that you do your homework, get those things out of the way. I hear a lot of buyers say, they don't want to get a pre-approval because it puts a ding on their credit report. But talk to the lenders. They're gonna go through all your finances. They're gonna give you the correct information and position you and get you in the best position so that you're ready to make a move.
Well, you bring up a good point here that, step one with any market when you're making this kind of financial decision, understand what's actually going on. I mean, the challenge that happens in real estate all the time is someone has a friend
Yeah.
that told them what happened,
Right.
or their dad's getting involved, and the dad's bought in 2 homes his entire life, and he comes
Right.
in and just wants to blow up the deal. And you're laughing because this is
But
all
it's
real.
true.
And so what I challenge everyone to do that's listening is that, take the advice of people, but also find someone that you trust
Right.
that can give you the real information. Not a lot of agents even understand the economy,
Right.
let alone know how to communicate that to their clients.
Mhm.
Not a lot of agents understand why demand is the way it is.
Right.
They typically think, oh, it's low rates, low inventory.
Mhm.
That's not the answer. It's millennial home buyers coming to the market, and they're the biggest generation we've seen, bigger than the baby boomers. And that's
Correct.
something no one is talking about right now, but that's where all the buyers are coming from. And these people decided not to buy homes. So when you look at what's actually happening, as an agent, find out what they're hearing and then give them the real information.
Mhm.
And if you got someone in your ear, call a professional. The same way you call a lawyer when you got some legal problems, you call an accountant when the IRS is calling you. This is the reason to reach out to an agent, because if you don't do that, then you might make a bad financial decision.
Right.
So how long do you see, like, what do you see the outlook here? I mean, my observations are that the next few months, I think there's going to be some opportunities for some buyers, and this is not the time for them to give up, especially if they've lost out on something. They have to be strategic, like you said, look at time on market, look at what's happening with properties, and then maybe take it one step further and, be ready to jump in and make an offer. I mean, what's the worst thing that happens when you write an offer? Do you get resistance from people wanting to write offers right now? Tell me more about that, because given all the rhetoric out there,
Mhm.
that's been a big problem over the past 12 months.
Yeah, some people get a little nervous, and they question, oh, I don't know if we should put an offer in. And you do have to ask them, what is the worst possible thing that can happen? Your offer doesn't get accepted. No harm, no foul, right? Then you're back to the drawing board. If it does get accepted, there's options. If you elected the inspections, go through, have the inspections. That gives you another chance through the home and another set of eyes on it. And then you still can make a choice at that point. You can terminate the contract. So you have to, if you want to buy a house, you have to try it. You have to put the offer in. You have to. I think after the first initial going through the process of all the paperwork and actually submitting the offer and waiting to hear back, I think after that initial process, if buyers have lost out, they're way more into it. They're like, okay, we'll try again. I don't typically see most buyers backing out unless they really got beat up, 4 or 5 offers, and then they might take a step back. But for the most part, the ones that have real motivation keep trying. And then they're more receptive to, okay, yeah, let's put an offer in.
Yeah.
And then that's when you have the success. That's when you get them under contract.
Well, and what she's talking about there is actually going through the process and not being afraid, because when you're afraid of making an offer, I mean, there's really 3 questions you want to ask yourself. What's the worst thing that happens when I make the offer? What's the best thing that happens? And what's the likely outcome? And that will take a lot of the emotion out of it, because we know this is an emotional purchase and a lot of people get freaked out. And when you lose out on all these offers like folks have been earlier, and now we're seeing the market go the other way, that this is the time when buyers need to get back in, because the people that always win are the ones that get in at the very beginning when you see the market going the other way. It's not the ones that wait. Or look at a lot of the sellers right now. I mean, how long we've been saying, don't wait to put your home on the market. Rates are going to be going up, affordability. And, they've danced around a little bit, but now we're seeing inventory creep up a little bit. And all of a sudden, those people that could have sold maybe in March, April, May, the market's not quite still an incredible market, not quite as incredible as it was a couple months ago. And that's the thing, is that when you see the market start shifting, and we gave you the stats, we've seen demand drop a little bit from that T3 home buyer demand index. This is the opportunity buyers have been waiting for. So, get on the phone, find an agent you can trust, that you feel good about, and whoever it is that can explain the process, that can navigate the market for you, and follow their lead. I mean, that's why you hire a pro in the first place. So to me, this is what everyone's been talking about, even though we look at supply. Everyone talks about how low the inventory is. It's at like a 1.2 month supply in the suburbs and 2.2, 2.3 in the city. But here's the thing no one's talking about. The number of sales this year are up from last year. So there's more homes that have sold, even though it's competitive, even though we're seeing that, and I'll give you some real numbers here in a second while I pull them up, even though the market's been competitive, even though there's all these multiple offers that are coming out. You look at what happened in Chester County so far this year, the number of closed sales from in July versus July of last year, they're up 13.4%. Year to date, we've seen 4,548 homes closed. That's up 33% from last year. Oh my
gosh, wow.
33.6 to be specific. So that tells me there's more opportunities. You just got to be ready to jump in and make an offer.
Right.
We can look at the same thing for Delaware County, and I'll give you all these numbers here, and then we can kind of break and get to our, I guess, the Zillow segment of the week. That's all we, that's all there is. Delaware County, same thing. Sales are up 36.7% from last year. Massive increase. Wow. Montgomery County, we're seeing not quite as big of an increase, and still a significant one, where we're looking at year over year, the number of homes that sold, they're up 28.3%. So, I mean, we're seeing more than, almost, all in the 30% range. And in Philadelphia, we're seeing, again, an increase in number of sales where, even though inventory's lower than it was last year, people don't have as many options. Sales are up 46%.
Wow.
46.6% in Philadelphia.
That's huge.
So what we're seeing, even though everyone's complaining about inventory, the options are there.
Right.
They're not looking at the right numbers, because there's more buyers coming to the market.
Right.
So if I'm a buyer right now and I see, well, there was 46% more homes that sold this year, maybe I got to get punched in the gut once or twice and lose out on an offer. There's still more opportunities.
Totally.
They may not be all at the same time, and that's what buyers are used to.
Right. Exactly.
So that's probably a good place to break. Well, we kind of laid it all out there for you. So we've got sellers covered. We got buyers covered. What we're going to talk about next is Zillow bring on some significant staff members. So we'll talk about what this means for consumers, agents, next on Toole Time Radio on WWDB 860 AM.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com.
Mortgage America's equal housing number, MLS 1285001.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
Buying a home or already own one? We can help. I am Kevin Hamill from Alliances Insurance Agency. If you haven't reviewed your policies in the last 3 years, now's the time. New home buyers, there are a number of ways that we can help you get to that settlement table. Call us to find out more at 610-816-0043, extension 3, or visit our website, alliancesinsurance.com. Don't forget the S, it's for savings.
The real estate market is red hot. Have you considered taking
10 seconds, standby.
the Tom Toole Sales Group at RE/MAX at 610-692-6976 or visit our website, Tom,
Coming back.
to connect and take advantage of these market conditions.
All right, welcome back to Toole Time Real Estate Radio on WWDB 860 AM. This is our producer Brett's favorite song, by the way. He told me that a couple weeks ago. So I wanted everyone just to be aware of that. And again, I'm Tom Toole. She's Stacey Mitchell, and we work with the #1 real estate team with RE/MAX in Pennsylvania and Delaware, the Tom Toole Sales Group at RE/MAX Main Line. So news coming out this week, and this went pretty under the radar. I don't know a lot of people that were aware of this, and it's important to note that. So on the Ladders reported this. That's a hiring site that Zillow. So the Google of real estate, our weekly Zillow segment, they are hiring 2,000 new employees with salaries as high as $325,000 a year. That's a big number.
Huge.
I mean, that's 4x almost the average median, or the median, not average income in the greater Philadelphia area, which is right around $87,000. So it's almost 4x that. I mean, roughly, so big salary. Now, the range on that is not the same. That's kind of the high end. They're talking about anywhere from 113 to up to that 325 mark. And what the article reports here is that they're hiring software development engineers in Georgia, software development engineers in California, around search functions, software development engineering in Washington State around big data, which I know Rich Barton loves, senior software engineer in California, senior applications analyst in Washington State, senior software development engineer in Washington State, senior product manager in tech in New York City. So there's a lot of hiring going on here. They have more than 250 remote job positions available on their website. So what do you think about all this, Stacey? I mean, I've got my opinion. I've got some news I'll share, but what do you think about this just at first blush?
It just made me very curious, especially coming off of our conversation of last week, especially since Zillow has acquired Showing Time. And we talked about the lawmakers urging an investigation into that. And then this comes out that Zillow's hiring 2,000 workers. It's all in the IT. They're going to beef up their all their platforms. I just think that they're getting ready. They're getting ready to shake up the market with the their iBuyer segment. And that's what I think they're gearing up, and it's going to probably happen sooner than later.
So that's a really great observation. But before I get into my opinion on it, the other piece of news you want to be aware of is on August 5th, there was some news that came out. Again, this was reported by Housing Wire that it was Zillow's earning report, and they earned a profit, but according to Housing Wire, no thanks to the iBuying department. So that they went on to say in this report, new quarter, same story for Zillow. They're making their money through agents advertising on their website, which they're phasing out, by the way. And right now it loses money buying homes for cash and then reselling them. So I find this pretty interesting because my view might be a little different than this. And to give some perspective on this report, when you look at they posted $52 million in net income for the first quarter, $1.2 billion in revenue in the first quarter, and Zillow sold 2,086 homes through Zillow offers in the second quarter, and the instant home buying program netted just under that, about 1,975 sales, so about the same number in the first quarter. So they sold about 4,000 homes this year through the iBuying side. And, this time last year, Zillow posted an $84 million net loss in the second quarter of 2020 and $768 million in revenue back then. So they're a profitable company now. They're in the black. So that's great for any company. And, so they're starting to make money here, but it looks like they're in transition because we know they're phasing out their agent advertising now, and they've gone to the referral-based model, which is a lot different. I do agree with you on the iBuying side. So what a lot of people probably don't know is I've got some intel from an iBuyer sale by Zillow in Texas, where they got a Zillow offer, and the seller's home. They interviewed agents. The agents told them one price. Zillow came in and offered $40,000 more than the agent said they could get, and this agent could have been someone that doesn't know what they're doing, not well informed. We're hearing this more and more that they're coming in and they're trying to build brand awareness, and they're basically just buying brand awareness, which is what they're doing. So, my view of this is that they're obviously gearing up to really build that arm, because if they're not going to, you bring on all these people that invest in tech and search and big data. Well, what Zillow probably wants to do is be able to determine who's going to sell their home, then approach them, and then allow them to use their search function on their website. So my view here is that they are not pivoting at all, but instead they are becoming one of these large tech companies that are really aggressively altering the marketplace. They're buying brand awareness, and they're bringing on all this talent. They're paying pretty handsomely for remote work, by the way. And I see them getting ready to continue the path they've gone down, to make their stock price go up, and to continue to build this iBuyer program, because all the pain points in the transaction are really getting to sellers right now and buyers. These issues that come up versus a clean cash offer that gets funded right away and there's no nonsense, that's appealing to a lot of consumers right now.
Definitely. Yeah, there's some sellers that are in a situation that if somebody's willing to do that at a quick close, they're going to take it. So yeah, I agree with you 100%, 110%. I think that's what Zillow is positioning themselves to definitely expand on that area.
Well, and what Rich Barton said in the earnings report, and this to me is pretty important, that despite the losses in the iBuying program, he's pleased with the progress. And that's been his, Zillow Offers has been the signature change to the company since he came back into the CEO role in 2019, replacing Spencer Raskoff. And he noted that the company has been able to ramp up capital to purchase homes, and the employees, so ramping up employees to do the deals, and now they're bringing on all these other people. So it's in line with the earnings report and the interview a couple weeks prior. And the next step, according to Barton, was to raise consumer awareness, which sounds like what they're doing with this sale in Texas. And he's repeatedly said that once more consumers know about iBuying, they will choose it over the traditional home sale process. My view is a little different on that there's going to be some, now if they could pay $40K over market, that's going to happen. Part of that has to do with the market right now. And right now you can probably get away with some of this stuff. What I know is that there's going to be some people that don't want the iBuyer offer and want to take it to the market to make sure they're getting the highest amount of money. It depends. The market's going to really dictate what happens here. And I think that's going to, right now, iBuying's pretty exciting because people are getting great prices. What happens when appreciation's only 2-3% and they start posting losses on all these sales?
Right.
that's where it gets pretty interesting.
Mhm.
And let's not forget, they are hiring in-house real estate agents. I mean, that's, are these the people that are going to handle these sales? Are you getting connected with someone on the phone that's a Zillow agent doing this deal just so they can take the listing and then refer them to their lending arm and all the other ancillary businesses that a lot of brokerages have relied on for a long time? So I think there's a couple things here. And then obviously there's the showing time component as well. But it looks like they are absolutely ramping up to be that we'll buy the home, we'll take it, we'll resell it.
Right.
And then we're going to try to get the mortgage for the buyer, and we're going to let them schedule the showing directly with us through showing time. That's probably what's happening here.
That's what I think. Yep, they got it all in place. And they have the plan. Don't they have dot loop?
They have dot loop, yeah. So they got all the contracts.
They have all the contracts. So they've been. It's kind of like a shell game. They're getting all their shells in order to create the entire system. So, and I agree with you about the home in Texas. I'm sure that's a part of, they're going to take losses because it's a part of brand building. Because that's going to spread like wildfire. People are going to talk about it.
Mhm.
I got this offer. It's 40,000 over what the agents were saying, through Zillow iBuyer program. And that's going to spread out, and other people are going to utilize it until there has to be a shift, because they're not going to be able to sustain losses.
Mhm.
So it is going to shift. It's probably part of their business building strategy there.
Well, and knowing what Rich Barton knows, I mean, there was he was just on the How I Built This podcast with Guy Raz, and basically he said, I was really frustrated with the travel agent experience. I wanted to jump through the phone and just do it myself.
Mm-hmm.
He said the same thing about buying a house. And, this is where agents, I mean, you can't just get away with being that door opener. I mean, this,
Right.
this, and everyone complains about Zillow. I mean, Zillow is going to do what they're going to do. The agent that provides value is the one that's going to survive. And that's
Absolutely.
where they need to understand the process, know the market. And I'm clear that from iBuying, we're a little more protected here than some of these other markets. Because right now they're doing this in like Texas and California and Florida and Arizona, where there's a lot of planned communities where there's 6 different models. And, this one had the bump out in the kitchen, and this one's got the extra large family room.
Right.
Houses aren't like that here.
Right. They're so different. I mean, from, like you said, from in one block, you could have, 12 different style homes. It's just the way our market is. So it's going to be a little tough in that sense. But I also think that it is about relationships, and it's about trust. And as a matter of fact, I was told that today. Exactly.
I didn't know this.
I was told that today from a seller that I've been nurturing and trying to help him get his home listed. And he did his homework. Trust me on this. He did his due diligence. He said that, what we offer, no one else out there could, as far as, the in-house photography and just our support staff. And he also said, it's about trust, and I trust you, and it's about relationships. So over this course of time, I built a relationship with him, and he trusts me. And that's why I'm going to get the listing. So I wholeheartedly believe that's still forever going to be, a factor in when people choose their listing agent. But there's going to be opportunity for folks that have to sell quickly or for whatever reason. There's different reasons why people sell and buy at different times. So, Zillow, there's going to be a space in the market for that.
And I mean, how many homes are they really going to sell? And this is the thing I think everyone, if they got 20% market share, right? Well, that's a high market share. That's still 80% left for the rest of people of agents to work with. And what I found pretty interesting here, and we got 2-3 minutes. So the Motley Fool, which is a huge investing blog, and they came out back in June. You don't have any of this information, Stacey,
Okay.
so stop looking through your stuff. They came out in June and said that offers is going to be the future of Zillow. And the first place when trying to figure out where Zillow is going is their management. And they've laid out this strategy in housing pretty clearly. And their vision is beyond the end of the decade, but they're looking at how it's going to be easier for people to sell and buy homes. And that's going to be one component of the market. For every person that uses LegalZoom, there's there's people that want to go to an attorney to get their estate done.
Yes.
Or to come up with an LLC agreement, because these blanket documents don't cover everything.
Correct.
Redfin's already tried this with, hey, we're going to give you 80 questions. I forget how many questions it is, but I'll give you 80 questions and you don't need to talk to an agent. You can make an offer on one of our listings. But you don't get the perspective of, do I need a stucco inspection?
Right.
What do I look for the septic? Is this in a flood zone? All these intricate details that are a case-by-case basis for homes.
Correct.
For every, WebMD appointment, there's people that want to go to the doctor. Right. So, there's going to be a place for this. And the agent that innovates and makes it easy and understands how to take the stress out of this process, they're the ones that are going to survive 10, 15, 20 years from now. Because even as, there's still travel agents that are in business, by the way.
Yes,
I mean, that do these things and book these things. That's a little bit of a different thing because, people didn't know where hotels were and all this other stuff, but you didn't have to go on the ground. So while Barton had success with Expedia, I don't know. I'm clear he can make a dent in the housing market, mainly because a lot of the agents are just lazy. I'll be the first one these people, they think they open the door. They post a couple of social media posts that say they're top producer in the title and they sold a bunch of homes. And they don't prep before the appointments. They don't know the market. They don't do all the things that we've talked about so much on this show and so much internally at our team meetings. That's where Zillow is going to take market share from people like you that are coming in so overly prepared for this and know how to build trust. Mm-hmm. It's no different than LegalZoom versus an attorney, WebMD, TurboTax versus an accountant. There's people that want to have someone knowing the details and not just plugging in some information and hoping it's gonna go well. And that's where things are going to differ here. So I am clear they're gearing up, but I don't think it's going to totally eliminate the real estate agent.
I agree 100%.
All right, so the time has come. The show's over this week. Again, I'm Tom Toole. She's Stacey Mitchell. If you want to follow Stacey, go to Instagram. It's at the number 2 Mitchco, Mitchco. Follow me at Tom Toole 3RD, at Tom Toole 3rd. Google us, Tom Toole Sales Group. You can follow the live stream on Facebook. Subscribe to us on YouTube. We put a lot of content out there. And if you want to email the show, it's info@tooletimeradio.com. Nick, thanks for doing another great job with the stream. Brett, we'll keep playing your song for you. Catch you guys next week. Thanks for tuning in.